Income Tax 2020, Practice Problem 1, Presentation 37, Schedule C Business, Estimated Tax Payments. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although I do think they offer a free 30-day trial. So if you can get access to a promo or demo version of it or any other tax software, it could be a good tool to practice with. Continuing on with our comprehensive practice problem 1, where in section 1 we enter the data related to the income. Section 2 we enter the information for the above the line deductions. Then we looked into the itemized deductions, and now we're focusing in on the Schedule C. So if we go on over to the Schedule C, we've been inputting the Schedule C, and this is our bottom line number at the 54,696. Now, the other thing that we want to just basically consider when we have a Schedule C is the fact that we don't have any withholdings related to the Schedule C income and may then need to make estimated tax payments. If we had the Schedule C business in the past, we're hoping maybe that estimated tax payments had been made in the past. And if they had not been, do we need estimated tax payments in the future? We need to do some kind of planning oftentimes with the Schedule C. Now, in this situation, notice we have a Schedule C business that has significant income, and that is feeding into the first page of the 1040, but we also have W-2 wages by both spouses. So notice we have tax that's going to be increased by the taxes resulting from the Schedule C business. We may be able to basically cover that by, instead of making estimated tax payments, increasing the withholdings on the W-2 wages. In order to do that, they'd have to basically estimate their withholdings and then adjust their W-4s and then send that in to their employers and increase the amount that would be taken out of their paychecks to cover the income that they're getting elsewhere, such as with the Schedule C. If they can't do that, or if they don't want to do that, or if the Schedule C business is their primary source of income and therefore they don't have the ability to do that, then we can make the estimated payments. So we're gonna think about the estimated payments and imagine that they have made estimated payments. Obviously, that's something that we would want to ask. How would we know about the estimated payments? Hopefully, we would send them an organizer, and estimated payments would be part of the questioning. And we would have then asked them if we were recommending estimated payments in the prior year to make them, and then our system would have rolled over that suggestion. So it should remind us, our tax system should remind us, and then hopefully they made the payments. Hopefully, if they followed our directions from last year, they would make the payments this year. If it's the first year they had the Schedule C business, then of course we would have to recommend and see what do we want to do next year. If this was the first time they had that business income, and we're saying, hey, that's kind of significant. You might want to, you're going to have to do something about that in terms of making the payment so you can avoid penalties and interests. You can either increase the withholdings with the employer, adjusting the W-4s to do so, or you can basically make these estimated payments. So let's imagine that they made estimated payments based on the last year's income, and I'm going to enter that into the system. Typically, they would make 4 estimated tax payments. Now, if they had a refund or something like that, they could have applied that over. I'm going to assume no refund, or the refund wasn't applied over to the payment in the following year, and I'm just going to make the 4 payments. Now, we're going to make state payments and federal payments. We're focusing in on the Fed, but the state payments could then have an impact on being deductible as Schedule A type of deductions on the tax return. They made 4 equal payments, 2,500 for the Fed, and for the state, we're going to say 1,000. First payment made on 04/15/20, so 04/15/20, and then we're going to say 2,500 and 1,000 on, we're going to say 07/15/20, 07/15/20, and then we have 2,000 and 1,000. I'm going to say 10/15/20. Oh, hold on a second. 10/15/20 and 10/15/20, and then another 2,000 and 1,000 on, I'm going to say 01/15/21, and this happened in 2021 now, 01/15/21. So these payments are being applied to 2020 tax year, but applied out to 2021. That means that these state payments over here then are not going to be affecting the payments for the federal side, but may be included in the payments for the state as with regard to the itemized deductions. But this other 1,000 being on a cash basis would not be, even though it's applied to 2020 because it wasn't paid until 2021. Now notice you might have had an overpayment from, or a payment from 2019 that has been applied over or paid in 2020. We're not going to deal with that at this point. We're going to say, okay, here's the payments that we made and go from here. So we're going to go back up to the forms. And then I can see now the Schedule A. You'll see the Schedule A is now something that's emboldened because we're going to be using it at this point. So that's because the state taxes now up top are no longer taking or estimating the sales tax, but are now taking the state income tax. So the state income taxes is now the estimated payments, the 3,820. I'm going to mirror that in our Excel sheet now. So if I go to the Schedule A and I calculate the payments, I can then go to my estimated payments over here. I'm going to add the payments. So we made quarterly payments of 1,000. I said 1,000 and 1,000. And then this last 1,000 was made in 2021. I want to make sure to kind of note that in the software. So when I'm trying to think about what is going to be deductible on the Schedule A, then I need to remember that that one is not going to be on the Schedule A, but it would be included as a payment when I'm looking at the state taxes, the payments for the state taxes, which we're not going to look at the state calculation here. So if I go back on over to the Schedule A, then for the state taxes, I'm going to say now we've got the taxes. I'm going to adjust this. I'm going to say this is going to now be equal to the payments that we actually made, which I'm going to then be picking up the California payments, which is going to be this plus this, and then I'm going to take out that one payment that was here. So it's going to be the 820 plus the 3,000, 3,820. So there's the 3,820, and so that then ties out here. And now our itemized deductions are at 25,875. So if I scroll down, we are currently at the 25,875. Going back then to page 1 on our tax forms, we're going to say, okay, then if I go back to the first page here on our tax formula, we are now at the itemized deductions being slightly higher than the standard deduction. So we're back to itemizing here, and that brings our taxable income to 86,220. So 86,220 taxable income. Back to the 1040, page 1, 86,220 in our taxable income, now itemizing. Then going to page 2, if we go then back up top, now we have the 10,459. I'm going to let the software calculate that. I'm going to enter that in here, 10,469, is that what it was? 10,459, 10,459. And then we have the other tax, the self-employment, 7,728. That should not have changed. So we have the 7,728. Total tax at the 18,187. The withholdings were now 8,000. That's what came from the W-2s. That's part of the payments. But then we also have the 9,000 of the estimated tax payments. So we got the total at the 17,000. And if we compare that then to the tax at the 18,187, we have the 1,200 and we have the penalty here of the $13. If we add that to our Excel worksheet, within Excel, I'm going to add the payments over here. We have the quarterly tax payments where we paid the 2,500, 2,500, 2,500, and 2,500 for the 4 quarters. I think I was going to make it for the 10,000, the total estimated payments. So I think I miskeyed in here because we're only at the 9,000. Let's go back over to the payments. And so this is why putting it into Excel is helpful, because you get that if you take it from the source document, you're less likely to make the data input error. So I got 2,000s on these last two. These should be 2,500 and then 2,500. So then that should bring us up to that 10,000. So now we've got that 10,000 plus the 18 bringing us to the 18,000 compared to the 187 of the tax has a $200 and 13 of it on a penalty. Comparing that to our Excel worksheet and going to the first page, we've got the 187. So obviously if we take the 187, if I pull out the trusty calculator here and go back on over, and I'm going to minimize make the trusty calculator smaller, we've got the 200 minus the 13 of the penalty is going to be the 187. So there's going to be our 187. So that ties out. So let's map it out one more time. So if I go back to the tax software, first page, We've got the total income now tying out to the 135,726, and that ties out here 135,726. Above the line deductions 13,464. So we got the 13,464 to give us to the AGI 122,262. So that's going to be the 122,262 for the AGI. And then we're taking the itemized deductions rather than the standard at the 25,875. So itemized deductions 25,875. We've got that 10,166 for the qualified business income deduction. Qualified business income deduction, taxable income at the 86,220. So we got 86,220. Then page 2, we're calculating the tax being calculated at that 10,459 plus the 7,728 to get to that 18,187. And that's going to be plugged in here, the 10,459 plus the 7,728 to get us to that 18,187. We're comparing that to the payments being both the withholdings from the W-2s as well as the estimated payments for the 4 quarters for the Schedule C business. Comparing those two out, giving us that 187. That ties out to the 187 here, plus the $13 to get to the 200 for the tax penalty that is there at this point.